Hey everyone, welcome back for another deep dive. I know a lot of you are out there trying to figure out the ins and outs of retirement planning, and let's be real, sometimes it feels like you're trying to solve a puzzle blindfolded, right? Especially with the way the market jumps around these days.
Definitely. And it's all about finding that sweet spot where you can see your savings grow steadily without worrying about every little market hiccup. People want peace of mind when it comes to their golden years.
Exactly, and that's why we're digging into the Symetra Select Pro Fixed Deferred Annuity today. We've been pouring over some really interesting information from Diversified Insurance Brokers, and we want to share what we found with all of you.
It's a product that aims to give you that sense of security. It's like a safe haven for your nest egg, shielding it from those market storms.
I like that, a safe haven. It's a great way to think about it, especially for folks who aren't comfortable taking on a ton of risk. So for those who might not be familiar with annuities, could you give us a quick rundown of what a fixed deferred annuity actually is?
Sure. So in the simplest terms, a fixed deferred annuity is a contract between you and an insurance company. And in this case, we're talking about Symetra. You put in a lump sum of money, and it grows at a guaranteed interest rate for a set period of time. What makes it deferred is that you don't pay taxes on those gains until you start taking withdrawals, usually in retirement.
Got it. So it's like a long game, letting your money grow tax-free until you're ready to tap into it.
Exactly. It's all about maximizing your savings potential for the future.
Okay, so let's get into the specifics of this Symetra Select Pro annuity. I see here that you need at least $10,000 to get started.
That's right. $10,000 is the minimum initial premium. But what's nice is that you've got some flexibility. During that first year, you can actually add more money to the contract.
Oh, that's handy. So you're not completely locked in after that initial investment. But there are some rules, right?
Right. Each additional contribution has to be at least $1,000.
Okay, that makes sense. And what about this guaranteed interest rate? How exactly does that work? I know I've seen 3, 5, and 7-year periods mentioned.
You got it. With the Symetra Select Pro, you get to choose how long you want to lock in that guaranteed interest rate. It could be 3 years, 5 years, or if you're in it for the long haul, even 7 years.
So let's say you go for the 5-year guaranteed rate. Does that mean your rate stays the same for all 5 years, no matter what happens in the market?
Yes, that's exactly what it means. You're essentially locking in a certain percentage return on your investment for that entire period. You don't have to worry about your money shrinking if the market takes a dip.
That definitely sounds appealing in today's economy.
Yeah.
I mean, the market's been like a roller coaster lately. Ups and downs, never know what's coming next.
Yeah, and that's where an annuity like this can shine. It's about creating that stability, that sense of knowing exactly what kind of return you can expect, regardless of all that market volatility.
I see. But wouldn't you say that sometimes a more volatile investment could actually give you a better return?
You're right, you could potentially get a bigger return if you invest in the market and everything goes your way, but it's a trade-off, right? With higher potential return comes higher risk. And for a lot of people, especially those approaching retirement, that risk just isn't worth it. They'd rather know their money is safe and growing steadily.
I hear you. I guess it all comes down to your individual risk tolerance
Yeah.
and your overall financial goals. But here's something that's been on my mind.
Hmm.
What if, let's say, an unexpected situation pops up and you need to access your money before you retire?
You're hitting on a key point there, liquidity. And it's a common concern people have with annuities. They worry their money is locked up too tight.
Yeah, exactly. Like, what if there's an emergency or a major expense comes up? Can you get to your money at all without penalties?
So the good news is the Symetra Select Pro isn't completely inflexible. They do allow you to take out up to 15% of your contract value each year without any penalty.
Well, that's good to know. So there is a safety net built in, even though it's meant for the long term.
Absolutely. It's designed to give you some breathing room if life throws you a curveball. And on top of that, there are some specific situations where you can actually withdraw even more without being penalized.
Really? Tell me more about that.
Sure. For instance, let's say you need long-term care in a nursing home. That's a significant expense. And the Symetra Select Pro has a waiver that lets you access more of your money to cover those costs.
That's a huge relief. Those long-term care costs can be really daunting.
Exactly. And there's also a waiver if you are diagnosed with a terminal illness. In that situation, you'd likely have immediate financial needs, and the Symetra Select Pro recognizes that.
It's good to see they've thought of those situations.
And one more situation to keep in mind is if you need to take those required minimum distributions, those RMDs from your other retirement accounts, the Symetra Select Pro allows for penalty-free withdrawals to cover those as well.
Gotcha. So there's a decent amount of flexibility built in, even though the main goal is long-term growth.
Right, they try to strike a balance. But I do want to add a word of caution here. While they offer those waivers, it's still generally not ideal to withdraw more than that 15% limit unless you absolutely have to.
Okay, why is that?
Well, for starters, if you do take out more than that 15%, you might end up having to pay surrender charges.
Oh, I see. So there are still potential downsides to early withdrawals. What exactly are these surrender charges?
Basically, there are fees that the insurance company might charge if you withdraw funds before a certain period of time has passed. Think of it as a way for them to discourage early withdrawals and encourage that long-term commitment.
Makes sense. It's all about incentives, right?
Yeah.
So anything else folks should be aware of when it comes to withdrawals?
Yeah, one more thing. Even if you are within that 15% limit or qualify for a waiver, the actual amount you receive might be affected by something called market value adjustments.
Market value adjustments. Now that sounds complicated. Can you break that down for us?
It's not as complex as it sounds. Basically, it means that the value of your withdrawal could be slightly higher or lower than what you initially put in, depending on how the market is performing at the time of your withdrawal.
Okay. So there are some market factors that could come into play, even though it's a fixed annuity.
Right. It's not completely immune to market influence, especially when you're talking about withdrawals, but it's still much less volatile than, say, investing directly in stocks or mutual funds.
Yeah, makes sense.
Yeah.
So let's say you've sailed through your chosen guaranteed rate period, maybe that 5-year period we talked about earlier. What happens when you get to the end of that term? Do you just have to start all over with a new contract?
Nope, not at all. You actually have a few different options when your guaranteed rate period ends. First, you can choose to renew the contract. It would be at a new interest rate, of course, based on whatever the prevailing rates are at that time, but it means your money continues to grow without interruption.
So even though the rate might change, you don't have to pull your money out and figure out something new to do with it.
Exactly. It can just keep rolling along, which is convenient for a lot of folks. But renewal isn't your only choice. You could also decide to just withdraw all of your accumulated money without any penalty.
Oh, that's nice. So you have complete control over your funds once you hit that end date.
You got it. And there's one more option that might appeal to some people, especially those who are thinking about their retirement income. You can actually convert the annuity into a structured income stream.
A structured income stream. What does that mean exactly?
It basically means you start receiving regular payments from the annuity, kind of like a pension. You can choose how often you get paid and for how long, depending on your individual needs and circumstances.
So it's a way to create a reliable stream of income during your retirement years. Very interesting.
And here's a little bonus feature. If you don't actively choose any of those options, renew, withdraw, or convert the contract, automatically renews at the prevailing interest rate.
Oh, that's good to know. So there's a built-in safeguard, just in case life gets busy and you forget to make a decision.
Right. It's designed to be hassle-free, and your money doesn't just sit there idle.
Speaking of things we might not always want to think about, but definitely need to, let's talk about the death benefit.
Yeah.
What happens to the money in the Symetra Select Pro if something happens to the person who owns the annuity?
That's a crucial aspect to consider, and the Symetra Select Pro does offer protection for your beneficiaries. Here's how it works. When you pass away, your named beneficiary would receive the greater of either the accumulated value of the contract or the guaranteed minimum value. So they're guaranteed to get at least a certain amount regardless of market fluctuations.
That's a huge relief, especially for those who want to ensure their loved ones are taken care of.
Exactly. It's a way to provide that financial security and peace of mind for both you and your family. And there's a special feature for spouses. If your spouse is your beneficiary, they actually have the option to continue the contract instead of taking a lump sum payout. They can just step right into your shoes, so to speak, and keep the annuity going.
Oh, that's really interesting. So it could potentially benefit multiple generations.
Exactly. It's a powerful tool for wealth preservation and legacy planning.
Okay, so just to kind of sum things up here, it sounds like the Symetra Select Pro annuity offers a pretty good balance of guaranteed growth, flexibility when you need it, and a strong focus on protecting your savings, both for you and your loved ones.
I think that's a fair assessment. It's not about trying to hit a home run. It's about hitting singles and doubles consistently and knowing that your money is safe and growing steadily over time.
Makes sense. But of course, as with any financial product, there are those who might say, hey, wait a minute, if you're locking in a fixed rate, you could miss out on potentially bigger gains if the market takes off.
Right.
How would you address that concern?
You're absolutely right. There's no one-size-fits-all solution when it comes to finances. The Symetra Select Pro is specifically designed for people who prioritize safety and predictability over the potential for those sky-high returns.
So it really comes down to knowing your risk tolerance and your own investment goals.
Precisely. If you're someone who thrives on risk and is shooting for the moon with your investments, then this might not be the best fit. But if you're looking for that peace of mind, that sense of security, knowing your money is protected and growing steadily, then the Symetra Select Pro is definitely worth considering.
I totally agree. And just a quick reminder for everyone listening, if you want personalized guidance on whether this annuity is the right fit for you, the experts at Diversified Insurance Brokers are fantastic resources. They can help you navigate all the details and figure out the best strategy for reaching your financial goals.
Couldn't agree more. It's always a good idea to seek out expert advice when making big financial decisions. They can help you see the bigger picture and make sure all the pieces of your financial puzzle fit together perfectly.
Well said. And at the end of the day, it's all about having that peace of mind, knowing your retirement is on solid ground, and you can finally relax and enjoy those golden years.
Exactly. That's what it's all about. Enjoying the fruits of your labor without constantly worrying about market ups and downs.
That's right. And on that note, we'll wrap things up here. Thanks for joining us for another deep dive. We'll be back soon with more insights to help you make those smart financial choices. Until then, take care, everyone.
See you next time. And remember, a secure retirement is a happier retirement.
Absolutely.